Spectators from all over the world watched the introduction of athletes that marked the official start of the Winter Olympics in what would be the costliest Olympic Games in history. But with an estimated price tag of $50 billion, is Russia really investing in its future? Joining me down the line to share his insights is Christopher Waefer. Christopher, Moody's put a bit of a dampener on the Games by saying, while the central government can comfortably accommodate its share of the cost, the reputational benefits of hosting the Olympics have been undercut by the high cost of the event and other bad publicity. Are you factoring in the Sochi Effect into your outlook for the Russian economy?
Well, the effect actually is relatively minimal. The $50 billion cost, well, first of all, actually the $50 billion cost is spread across a greater infrastructure footprint than simply the cost of building ice rinks or ski jumps or the like. I think the impression that one has is that the $50 billion has gone into, just purely these very specific Olympic infrastructure, where in actual fact it also includes the upgrading of the airport and the roads and rail networks and power supplies in the region. And it's been spent over a period of about 5 years. So the impact in terms of the spending, in terms of government spending, etc., hasn't really been noticed. And at the same time, we're not looking for any Olympic boost or Olympic effect in the economic numbers. Neither do we think it will be a detraction on growth, nor will it be a boost to growth. It should not be noticed, in our opinion, in this year's macro numbers. In terms of reputational risk, I think it really does depend on what happens next. As you say, regardless of whether the money was spent on infrastructure or Olympic-specific amounts, if in the next couple of years this is deemed to be a successful region, tourist and vibrant, then I think the damage reputationally will be very minimal. So it really does depend on what happens and what the government can do with this region and how it can impact the local economy afterwards. But at a national level, I say almost a negligible impact.
You say the ruble has fallen too far and too fast through January because of a mixture of external contagion and domestic central bank actions. The one thing Russia has got going for it, unlike the fragile five economies, is that it has a current account surplus. So there are some who argue that ruble weakness could dissipate in coming weeks. But could constant high oil prices and lack of investment be a renewed cause of concern moving forward?
Well, I think certainly I believe that the January fall was too much too quick. But I am actually looking for the ruble to weaken steadily over the year, as happened last year. So I think the January effect was partly the contagion from the latest actions by the US Fed and the concern that it raises about emerging markets generally, but also the actions of the Russian central bank. They ejected too much liquidity too fast. But I am still looking for a steady decline in the value of the ruble this year, and that's partly because Russia has committed to a full free float of the ruble by the end of this year, early next year. So the more players will be coming into the market.
Russia's finance ministry cancelled its weekly domestic bond auctions 2 weeks in a row. While Russia may be in a comfortable fiscal position to withstand this at present, does it start to raise crucial questions about the way emerging economies are refinancing themselves?
Well, again, Russia is in a better position currently because of oil price and oil revenues. And at the current price, the budget is almost balanced. And at the start of the year, the way Russia spends its money, it back ends the spending on the budget. Now, last year, for example, the federal budget ran a deficit of 0.5% to GDP, but right up to the end of October, it was running a surplus of over 0.5% of GDP. So, the first 10 months of the year generally are surplus years, and then you get this massive spending in the last two months of the year. So, that's quite different than is the case, say, with Brazil, Turkey, Argentina, Indonesia, and the others, where there is more of an even spread through the year in spending and revenue. So Russia can afford, therefore, to delay bond auctions, raising debt, etc., because it's actually running a surplus. It's not a good way to manage your debt, and it's not something that the investors would like to see, other than as a temporary measure. There needs to be more predictability in funding and in rollover funding. It would be totally crazy, for example, if you were to have a situation where Russia did not tap the bond market for 9-10 months and then came in massively looking to cover the spending and the deficit in the last 2 months of the year. It would completely destroy the market and raise the risk premium. So absolutely, there needs to be more predictability in bond raising, and we need to see that now in the next couple of auctions. In other words, it would be a very bad idea for the finance ministry to delay any more bond auctions.
Russian stocks fell for the first time in 4 days, erasing earlier gains as investors awaited Federal Reserve Chairman Janet Yellen's first report on monetary policy. There is also some concern that the Fed taper could trigger significant ruble devaluation and worsen business sentiment. You had expected the pace of tapering to accelerate, but with 2 disappointing US jobs reports in a row, is this still your view?
There will be certainly more of a balance between the economic indicators and the Fed's tapering. I think it's quite clear that if the economic indicators were to start to deteriorate and give cause for concern, I think the Fed would absolutely slow down the withdrawals. In other words, would delay accelerating tapering, because that simply would be foolish to contribute to the any economic pressures. My assumption is that the U.S. economy will grow by over 2% this year, which is the IMF number. And if the indicators kind of confirm that and go back on track, then I think that will allow the Fed to accelerate the tapering, which will then put pressure on emerging markets. But I think the Russian equity market is the most vulnerable to the Fed's tapering. The ruble, as I mentioned, is taking its lead much more from the oil price, and I think the central bank, the inconsistency and contradictory way that the central bank was funding the banking system last year, which effectively meant that the banks were able to bet against the central bank and make money on it. So I think everybody's learned that lesson. There should be a more effective management of liquidity this year. The oil price remains around the current level. As I say, that allows for a kind of more steady decline in the ruble rather than the sharp drop we've seen in January.
Christopher, great to speak to you. Thank you so much for your time. Well, viewers, that's all from me for the moment, but please do click back to the website for an energy-orientated commodities corner with Natalie MacDonald. Goodbye for now.